Welcome to another edition of the Nigerian Investor. Last week we talked about dividend declaration as well as the AGM of Dangote Cement PLC. Today we want to discuss on the state of IPOs in the Nigerian capital market. Capital markets generally are expected to be the most significant source for companies to raise fresh funds, allow businesses to be publicly quoted to raise additional financial capital for expansion by selling shares of ownership of the company in a public market. Capital raising through initial public offer (IPOs) remains one of the key primary market activities, which can be used to gauge investors' confidence, market pulse, and the health of the market in relation to its contribution to the economy. The last time Nigerian market witnessed a sizable number of IPOs was in 2008 before the market bubble, with 21 IPOs recorded, while the bulk of the IPOs happened in 2006 during the banking consolidation, with 65 IPOs witnessed. No IPO was recorded between 2009 and 2012, while one came up in 2013. So far in 2014, the market has witnessed one IPO, while the second in 2 years, specifically in 2014, is currently on the Vetiva DV Fund initial public offer, which we closed on the 26th of May 2014, and it offers about 20 million units valued at 100 naira per unit. We had an exclusive interview with the Managing Director, Chief Executive Officer of Vetiva Capital PLC, Mr. Damilola Ajayi, who graciously provided insight and perspective to the Nigerian Investor School on the ongoing DV funds. Let's hear from him.
DV Balanced was designed after in exhaustive research into the market. And what we did was to look at the market and look at investor needs, investor appetites, investor risk profiles, especially following the downturn we had in the market in 2008. And the results were very interesting. First, we realized that investors, even though we had a downturn, still had tangible desire for attractive returns provided by equities. However, the risk profile of investors had begun to change. Many investors were beginning to get more cautious or conscious of risk. And when we were talking to many participants when we did our research, one thing that came out was everyone wanted to know what the risk mitigation factors were. So DV Balanced, if I want to define DV Balanced is an open-ended unit trust scheme that invests primarily in equities, because equities over the long term, conventional wisdom will let you know, will give you very attractive returns. However, to satisfy or to address the risk factor, an appropriate allocation of the assets of DV Balanced Fund will be invested in fixed income securities to mitigate the volatility or risk, one can use that word interchangeably, associated with investment in, equities. So what DV Balance gives an investor is ability to get advantage of, or to take advantage of, professional management, a diversified portfolio, risk mitigation, because we all know equities markets everywhere, are volatile, and then one can build, wealth over time. You see, really, if you look at mutual funds or the unit trust industry in developed markets, unit trust schemes are usually used as saving scheme or for personal retirement plans. That's also something you can do with DV Balance. You can have an investment program where you put in a sum of money every month as a savings plan towards a specified objective, and you are not exposed to the volatility of the market as a whole. A portion is in fixed income securities, to mitigate that volatility.
The following are the upcoming AGMs in the market: NPF Microfinance Bank PLC on the 19th of June 2014 and Nashaka Cement PLC on the 17th of June 2014. The following companies have declared corporate actions: NPF Microfinance Bank PLC declared 10 kobo and the closure date set for 9th of June 2014, and Nashaka Cement PLC declared 42 kobo and the closure date set for 28th of April 2014. On announcements in the market, Union Bank Nigeria announces divestment from non-banking subsidiary. Union Bank of Nigeria has notified the Nigerian Stock Exchange that the bank has appointed financial advisor for the purpose of obtaining guidance and direction on the best option for complying with the directives of the Central Bank of Nigeria's regulation for all banks to divest from their non-banking subsidiaries and focus on their core areas of expertise. The board of Union Bank of Nigeria PLC has resolved that the bank should divest its shares in its subsidiaries, with the exception of Union Pension Custodian Limited, which the board resolved should be wound up, and Union Bank UK PLC, which will be retained as the only subsidiary of the bank. Nigerian Breweries announces proposed scheme of merger with Consolidated Breweries PLC. Nigerian Breweries has notified the Nigerian Stock Exchange that its board of directors and the board of directors of Consolidated Breweries PLC have agreed to explore a combination of the two businesses by way of scheme of merger. As a result, a pre-merger application has been filed with the Securities and Exchange Commission for its approval. NSE Disciplinary Committee summoned Southern Chartered Securities and 5 others, dealing member firms. They are to appear before the Disciplinary Committee of the National Council of the Nigerian Stock Exchange for a hearing in respect of their failure to activate their dealing member licenses. The dealing firms are Alpina Investment and Trust Company Limited, BBL Asset Management Limited, Integrated and Allied Securities Limited, Multi-Trust Securities Limited, Ogun Branch License, Standard Chartered Securities Limited, and Translog Securities Limited, Ogun Branch License. That's all we have for you on the program this week. Until we come your way again next week, bye for now.